Costa Rica, long celebrated for its pura vida lifestyle and reputation as a beacon of stability in Central America, is now facing a period of economic uncertainty that few could have predicted just a few years ago. The country, once a model for steady growth and social progress, now finds itself grappling with a sobering economic slowdown that is being felt across all levels of society. The once vibrant economic engine has lost momentum. Growth has faded, replaced by moderating GDP, rising unemployment, deflationary pressures, and mounting public debt. These challenges are not just numbers on a chart, they represent real struggles for families, workers, and business owners. In 2024, GDP growth cooled from 5.1% to 4.3%, and by early 2025, it dipped further to 3.9%. Projections for the year now sit at just 3.2%. These figures signal a clear shift from the robust expansion Costa Rica enjoyed in the past decade. This slowdown is being felt in everyday life. Household budgets are tighter, businesses are more cautious about hiring and investment, and consumer confidence is slipping. The real estate market has cooled, and small businesses are struggling to stay afloat, creating a feedback loop of waning confidence and spending. To truly understand this dramatic shift, we must look beyond the numbers and statistics. We need to examine the deeper forces, both global and local, that are reshaping Costa Rica's economy and challenging its future prosperity. The numbers tell a stark story. Behind every statistic lies the reality of daily life for Costa Ricans, as families, businesses, and policymakers grapple with mounting challenges. GDP growth has slowed sharply, signaling fewer opportunities and tighter government budgets. The once vibrant business districts now show signs of hesitation, as companies scale back investments and hiring freezes become more common. This slowdown ripples through every sector, from tourism to technology, affecting both large corporations and small family-run shops. Unemployment rose from 6.9% to 7.5% in early 2025, while the employment rate slipped, straining households and social systems. For many, job security has become uncertain, and the search for new opportunities is more competitive than ever. The impact is felt most by young people and those in vulnerable sectors, who now face even greater barriers to stable employment. Deflation set in by May 2025, with prices falling often a sign of weak demand and economic distress. While lower prices might seem like a relief, they can actually discourage spending and investment, trapping the economy in a cycle of stagnation. Vendors and shop owners struggle to move their goods, and consumers hold off on purchases, waiting for prices to drop further. The central bank's high interest rate of 3.75% has kept inflation in check but further dampened spending and investment. Borrowing costs remain elevated, making it harder for businesses to expand and for families to finance major purchases like homes or cars. Public debt is projected to hit 60% of GDP by year's end, limiting the government's ability to stimulate the economy. With so much of the budget tied up in debt payments, there's little room left for new programs or emergency relief. Government spending barely increased, leaving policymakers with few tools to counter the downturn. The lack of fiscal flexibility means that even well-intentioned reforms or stimulus measures are difficult to implement. These indicators reveal a constrained, cautious economy struggling to regain momentum. As Costa Rica faces these headwinds, the path forward will require resilience, innovation, and careful decision-making from leaders and citizens alike. The slowdown's impact varies across sectors, exposing deep vulnerabilities. Agriculture, once a pillar of growth, swung from 4.7% growth to a 4.3% contraction, after heavy rains devastated crops in regions like Cartago. Farmers faced financial losses and price volatility, with little government support available. Tourism, a key economic driver, stalled. Growth plummeted from 7.2% to just 0.1% as arrivals and foreign exchange earnings dropped sharply. Services and industry also slowed, squeezed by weak demand and high borrowing costs. Businesses cut back on investment, and job prospects dimmed across the board. The result? A challenging climate for workers and entrepreneurs alike. Costa Rica's fate is closely intertwined with the global economy, and recent slowdowns in the US and China have hit the country's exports hard. As two of Costa Rica's largest trading partners, any dip in their demand quickly ripples through Costa Rican industries, from agriculture to technology. Local businesses that once thrived on steady orders now face uncertainty, and workers worry about job security as export volumes shrink. The strong colon, while often seen as a sign of economic stability, has made Costa Rica noticeably pricier for international tourists. Hotels, restaurants, and tour operators have all felt the pinch as visitors find their money doesn't go as far. At the same time, exporters are squeezed by higher costs, making it harder to compete in global markets. This currency strength, though reassuring in some ways, has become a double-edged sword for the economy. Fewer U.S. tourists arrived this year, partly due to reduced airline capacity and a travel advisory citing rising crime. The drop in flights has made it more difficult and expensive for travelers to reach Costa Rica, while concerns about safety have led some to choose other destinations. Tourism, a vital pillar of the economy, has suffered as a result. These factors have compounded the tourism slump, leading to empty resorts and shuttered shops in once busy areas. The uncertainty has also discouraged foreign investment, as investors look for more stable opportunities elsewhere. Local businesses, especially those dependent on tourism, are struggling to stay afloat. The risk of higher U.S. tariffs and ongoing security concerns threaten further disruption. New trade barriers could make Costa Rican goods less competitive, while worries about crime and instability add to the challenges facing both investors and everyday citizens. As a small, open economy, Costa Rica is highly vulnerable to global shifts. Changes in international demand, currency fluctuations, and geopolitical tensions can all have outsized effects here, making economic planning especially challenging. Policymakers must now focus on building resilience to external shocks. This means not only strengthening local industries and diversifying exports, but also investing in security and infrastructure to attract visitors and investors back. The global chill has made clear that Costa Rica's economic health depends on both internal reforms and external recovery. The path forward will require adaptability, innovation, and a renewed commitment to stability in an unpredictable world. The government and central bank face tough choices. The central bank's priority has been inflation control, keeping rates high even as deflation and stagnation set in, making borrowing costly and stifling growth. Businesses complain that expensive credit is choking investment and job creation. Meanwhile, high public debt leaves little room for fiscal stimulus or targeted support for struggling sectors like agriculture and tourism. The lack of robust government intervention has deepened the pain for those hit hardest. Creative, low-cost policy solutions are urgently needed to support recovery. Costa Rica's slowdown is a web of interconnected challenges. Global weakness, reduced export demand, and tourist arrivals, while a strong colon and tight monetary policy squeeze domestic growth. High interest rates and weak demand hit businesses and consumers from all sides. Sectoral downturns in tourism, industry, and agriculture fed a cycle of rising unemployment and falling confidence. With public debt high, the government has been unable to step in, leaving recovery dependent on external improvement or a policy shift. The country is caught in a low-growth trap with few easy exits. Breaking the cycle will require bold decisions and coordinated action. Looking ahead, Costa Rica's recovery depends on smart policy and a bit of luck from the global economy. Lowering interest rates could help, but risks to the currency and capital flows remain. With large-scale stimulus off the table, targeted support for agriculture and tourism is essential. Long-term, Costa Rica must diversify exports, strengthen public security, and build resilience to shocks. The current crisis could spark overdue reforms and renewed growth. Costa Rica's history of pragmatism and stability offers hope. With bold leadership and shared purpose, the nation can navigate these uncertain waters and restore prosperity. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.